morning. This is Horizon's Middle East and Africa. Our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a crushing response to his country's enemies, including the U.S. Oil advances after OPEC Plus agrees to push back its December production increase by 1 month. We are live at Abu Dhabi's ADIPEC later with the latest energy updates. A flurry of polls show Vice President Kamala Harris and former President Donald Trump in a close race, with Harris having a slight edge nationally and in some swing states. It has just gone 8 a.m. across the Emirates. I'm Joanna Versace, back in Dubai, not for long. I will be heading over to Abu Dhabi shortly. But what a week. It is finally here. U.S. elections will be taking place tomorrow. It is very close. We will be talking more about that on the show, and also how markets have been reacting to the latest polls that have been released over the weekend. Not just U.S. elections. We also have the Fed meeting. It's on the Thursday this week to count for the U.S. elections results. So watch out for that as well. In addition to plenty of other decisions taking place this week, we have the standing committee of the NPC in China taking big decisions about what is going to happen to the country fiscally as well, and then the Bank of England meeting too to round things up later on this week. So lots to get through. As for markets, you can see behind me both S&P and Nasdaq are leaning towards the green, tilting towards a more positive start to the day. This despite the fact that the S&P witnessed its first pullback in 5 months for the month of October. Not a great month. And as we spoke about towards the end of the week last week, a lot of volatility towards the end of the week in those magnificent 7 stocks. By Friday, the market digested that quite shocking NFP print coming in much lower than expectations, looking through it due to some disruptions in weather, the strikes that are taking place. And we saw a bit of a rebound in Amazon and Intel, which gave some life back to these markets. But of course, we are heading into what could be quite a volatile week for U.S. equities. The USD is slipping this morning, down 0.2%. And namely, what some people are saying is that USD and yields, which are closed for trading now because it's a Japanese holiday, have been closely tracking the polls that have been putting Trump at a slight advantage. So the Trump trade, so to speak, has been stronger USD, higher yields. Given the latest polls of the weekend that show that now Harris has a slight advantage, what we are seeing is the dollar is slipping in trade early this morning. So that is in direct relation to what's been happening with those election polls. And then Brent also in focus today, up 1.6%. We are getting a bit of a boost. There are 2 things going on here. OPEC Plus have announced that they're pushing back their decision to put extra barrels back to the market by 1 month. So we'll no longer be starting beginning of December. The new plan is for them to start beginning of January. So that is a bit of a supply, a technical factor that is giving some boost to this market, in addition to geopolitical concerns once more, with Iran now threatening a reprisal to the Israel attack on Iran from last week. So we will talk more about that, but that's what's happening in oil today. Finally, I just want to draw your attention to our terminal chart today, talking about the Fed and what's priced in. The meeting is happening this Thursday, as I highlighted. 25 basis points priced in. There's about another sort of 20 basis points priced in for the December meeting as well. So just shy of 2 interest rate cuts priced in by the end of this year out of the Fed. But also, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, there's so much going on this week. But first, just give us an overview of how Asian markets are starting off this trading week.
Yeah, we're seeing stocks in the region mostly higher. It's not just about the Fed or the U.S. election. It's also, as you mentioned a short while ago, about China's NPC. And some see this week as a window for when Chinese authorities can announce stimulus in the fiscal sense, as well as market intervention. So stocks in China, CSI 300 running a bit higher, but it did close lower last week. We're seeing South Korea's Kospi, the outperformer, because not only are markets anticipating China's stimulus, there's also plan to drop capital gains tax on a day where Asia currencies are mostly clawing back declines from the US dollar. You see the yen is gaining ground as well. Part of this is because of the shift in tone from BOJ Governor Ueda last week, but also a bit of a rewinding or unwinding of the so-called Trump trade. Jumana.
Yep, that's exactly it, and what we're seeing in other markets as well. Avril Hong, thank you so much. Now, Iran's supreme leader escalates his rhetoric, warning of a crushing response to the country's enemies, including the U.S., following Israel's missile strike on the country a week ago. For more on this, Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joins us now. So Iran now have actually started to warn of a reprisal to the Israeli attacks from a week ago. How seriously should we be taking this?
Yeah, quite. And I think it's what you read into it. So if you think about the 24 hours, 48 hours after that attack from Israel, they were quite circumspect and quite restrained, shall we say, particularly Khamenei. And Khamenei's got a long history of being very cautious here. But something has happened over the last week, and I think that speaks to divisions within Iran about just how they should respond, just as we see divisions within Israel about how hard they should have gone on that attack. So you've both sides seem to have different camps pushing it very much in the hawkish direction.
Yeah, it's super interesting. I do want to bring you some comments from the president, though, Pezeshkian, who's I guess considered to be one of the more moderate parts of leadership in Iran. But he said our response could change if there was a ceasefire in Gaza and Lebanon. And I thought it was interesting over the weekend, again, those revelations that some sensitive documents were supposedly released by Netanyahu's government that would actually foil attempts to get that ceasefire across the line. Again, how significant is that?
Yeah, again, I mean, I think it speaks to the divisions within the Israeli government and particularly the opposition. So obviously we don't know too much about it because a lot of it has a gag order on it. But of what we do know, I mean, it does seem to show, again, these sort of deep divisions within different officials within the government and what they want to do next. So I think going forward, yes, there is clearly one camp on both sides, that is Israel and Iran, that would like a peace deal. I think particularly from the Iranian point of view, it's so they can save face and not have to respond, because they are quite exposed at the moment, you know.
Does a Harris or a Trump win matter for the direction of the ceasefire?
Yeah, I mean, I think in the short term, probably not. In the long term, absolutely, because Trump is very much in that camp that we saw the last couple of administrations where fundamentally they would like to get out of the Middle East. You know, they have bigger fish to fry elsewhere in the world and they can't do both. But at least for the short term, I don't think it would change very much on the ground.
Yeah, it certainly appears to be the case. Stuart, thank you so much for the overview this morning. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Well, U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcome. Let's bring in News Desk editor Jill Deesis. Jill, so what are the polls showing us about how close this race is right now?
Hey, Jumana. Well, as you said at the beginning of this program, markets are certainly sort of hedging their bets a little bit more on a Trump victory. That's because of some polling that came out of the weekend that was a little bit more favorable to Kamala Harris, the Democratic candidate here. But ultimately, I mean, these are still polls showing them really, really neck and neck. Harris got a bit of good news over the weekend in the form of some national polling showing her up, although, of course, this isn't really about the national polls. We know that in 2016, Hillary Clinton won the popular vote but lost in some critical battleground states that ultimately cost her the election. The favorability for Harris, though, does extend to some polling showing her a bit up in some of the key battleground states. But ultimately, a lot of this is still within the margin of error, which was really just telling us that this is still ultimately a coin flip. We'll have to see what ultimately happens on Election Day. There's one other poll, though, that I want to point out to you, Jumana, that is getting a lot of attention from over the weekend. That's this really, really reliable poll coming out of Iowa that actually shows Kamala Harris up by 3 points. Not sure that she can actually take a state that is, voted for Trump twice, but it does kind of indicate that maybe, there's, a bit more of an advantage there than we're ultimately seeing in some other polling. But at the end of the day here, it still really is, it really feels like a 50-50 chance here. Either candidate could really take this race.
Yeah, I mean, back in 2020, Trump won Iowa by 9 points, I believe it was. So it is quite significant that she seems to be, according to the latest poll, gaining a bit of an advantage there. What are the final pushes that the candidates are making in a bid to appeal to perhaps the very small percentage of the population that remains undecided?
Yes, well, Jumana, as we were just talking about, I mean, again, this isn't really about the national vote here. This ultimately comes down to votes in just a handful of key battleground states that are going to decide this election. And both Kamala Harris and Donald Trump have been focusing their campaigns in those states. Kamala Harris just spent a day in Michigan, where she was ultimately trying to relay her economic message at several rallies here. She also was spending some time in Detroit at a historically black church, trying trying to appeal to black voters there. We've been seeing some black voters break more toward Trump recently, so she's trying to regain trust with those voters there. We saw Donald Trump in North Carolina, in Pennsylvania, in Georgia, all really important states here for this election right now. But yes, I mean, at this point, it does seem like the candidates are really focused on being in those states. We've got Kamala Harris in Pennsylvania tomorrow to ultimately kind of close out her campaign here. These candidates do recognize that no matter what's happening around the country, they need to focus their efforts within some states that can ultimately deliver them the election.
Yeah, it seems like all roads lead to Pennsylvania is my one key takeaway from this election going into tomorrow. It's going to be super tight. Jill, thank you so much for bringing us that report. That was Jill Desis, the news desk editor. Well, still ahead, hear why Tribeca Investment Partners thinks that election and tariff fears are overplayed as traders hedge their bets for either Harris or a Trump victory. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the dollar fell as investors walked back bets on Donald Trump winning the U.S. presidential election after the latest polling data indicated no clear advantage for him. So U.S. elections obviously in focus as the markets continue to piece together some of the data that's coming through over the course of the last few days. We have the Fed meeting coming up this Thursday, not Wednesday, Thursday this week due to the U.S. elections. And then, of course, we had that non-farm payroll print coming through on Friday. So to discuss all of this and more, let's bring in Jun Bei Liu, portfolio manager at Tribeca Investment Partners. Jun, let me just pick up on that rather surprising NFP print that came through on Friday, much lower than expectations. Clearly some weather disruptions at play due to the hurricane. You also had the Boeing effect with the walkout. But to what extent do you think are the Fed going to be willing to look through this piece of data?
Look, I think all the data are now very much supportive of further cuts, and I don't think one data point is going to change the way they think about where it's going. I think the market is very fair in terms of pricing in another 2 cuts this year, and then more so next year. I think all in all together, it is certainly supportive of further easing, quite rapidly before the end of the year.
Do you see that this potentially moving the bar lower for a 50 basis point cut? Or again, as I just articulated, is it just deemed to be one of those one-off situations due to those weather disruptions that I spoke about?
Yeah. Absolutely. Look, they will talk to the one-off nature of it. I think the cuts to come through, it will be 25 per cut in the future. But as an investor, it actually doesn't matter whether it's larger or smaller. All we know, they will consistently cut the rates to get to a point where the economy will respond, and that is positive for the economy and for the equity market.
Well, let's talk about the volatility going into this week. The VIX has been steadily creeping higher in anticipation of what could be really a toss-up result either way in U.S. elections. And there's been a so-called Trump trade that has done well over the course of the last few weeks. That's a stronger dollar, higher U.S. yields. Do you agree with that thesis? Is this the accurate representation of what the Trump trade should look like, do you think, for U.S. markets?
Look, I think based on what he has proposed, that it certainly seems like it will be quite inflationary. It will be, pro-business within America. It'll be tax cuts. So it's all positive, on the stimulus front. And, what that certainly means that perhaps the inflation higher and the interest rate won't go low as previously expected, and hence why the U.S. dollar strength. So, I think that directionally, what the Trump trade, is taking place is correct. But I think the market needs to take a step back. Whether it's Trump, whether it's Kamala, it's it doesn't. The historical example has shown the election outcome, unless there's policy impact, real economic policy impact, election has a small impact for the medium term. So we do expect the market to recover from whichever way it is, and we will look to the volatility as buying opportunity.
Yeah, well, to your point about the real economic impact, what if there is a mass imposition of tariffs, not just on products from China, but around the rest of the world as well, which is something that former President Donald Trump has touted. How would the reaction play out, do you think, on the ground? Are there any sectors that you're looking to avoid because of that scenario?
Sure. I think under that scenario, you absolutely will be very careful with the commodity-related businesses. Of course, this is more targeted towards China, but if around the world trade is going to be impacted, and that's negative for everyone. And with the big tariff, clearly it's bad for inflation as well, because goods prices are going to increase. It will be actually quite terrible for the consumer within US. Now, my view is that it's the whole tariff rhetoric is overplayed. Yes, he will pose threats, but I think looking at the previous example of where he talked about those tariffs, they have been rolled back significantly from where he first proposed. So, we do think while there might be more tariff, but the ultimate position will be much better, wind back from where we're thinking at the moment, which could be up to 50%.
Yeah. June, there's been a bit of a shakeout for the Magnificent Seven last week, and not so magnificent in the last couple of days of trading, down about 2% for the week, led by disappointing results out of Meta, Alphabet, Apple sales disappointing. We've spoken about this in the past, and you have signaled that you would look to buy and get involved on dips. Do you still have that view now, and how do you read the price action in Magnificent Seven in the last few days?
Yeah, absolutely. Look, I do like those businesses, particularly, we see this AI-related growth is just at its infancy, not so much for the chip maker, but it's really filtering through the rest of the supply chain. We do think they look quite incredibly, interesting. I think for every portfolio, you need to have growth companies like one of those in the portfolio to ensure future-proof the growth profile of the entire portfolio. Near term, these names might be used as funding source to buy the cyclical names we talked about before, which will do better. But however, I would be looking at some of those businesses should they get sold off as a result of this rotation that will take place in the next 12 months.
And some people are talking about the prospects for small caps as well. If we are indeed in this no landing scenario for the U.S. economy, do you expect small caps to do well then?
Absolutely. I love this no landing scenario. Absolutely. Look, I think small cap businesses has been impacted enormously, and because of high interest rate, and now with the interest rate going lower, and economy not doing too badly, and with potentially this is a slight improvement in terms of sentiment. I think these companies looks much cheaper than some of the larger or the Magnificent Seven that's being dominate the chart board.
Yeah. Jun, always a pleasure to talk to you. Thank you so much for coming on our show and giving us your views. Jun Bei Liu, Portfolio Manager at Tribeca Investment Partners. Thank you very much. Well, coming up, a seismic shift in Botswana. We discuss the significance of the opposition coalition winning the election next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Well, let's turn to Botswana, where an opposition coalition has emerged as the surprise winner of the parliamentary elections. Duma Boko was sworn in as president after his coalition, the Umbrella for Democratic Change, secured an outright majority in the 61-seat legislature. It is the first time power has changed hands since independence almost, listen to this, 66 years ago. Wow. So for more, Bloomberg's Ondiro Ganga joins us from Kigali. Really surprising results here, Ondiro. And dare I say it, diamonds are not forever.
Absolutely, Jumana. They're not forever. And we have seen the new president, Duma Boko, take office. And unlike other places on the continent where for a victory this resounding, there had been pomp, color, red carpet rolled out, it was a very simple swearing-in ceremony in an office. And he gave quite an impassioned speech after he was sworn in. He acknowledged the current state of the country, saying he dare not fail and disappoint the people, saying he's going to do everything within his power to ensure that he delivers on the promises that his administration made while they were campaigning to get into office. He also put his human rights background into office, saying that he acknowledges that there are diverse views in the countries, which he welcomes, and says that he wants the citizenry to support and rage to keep the politicians alert. We also saw the outgoing president do a press conference immediately. It was clear that they were losing the election, and he said the evidence is overwhelming and they've massively lost the election. And in a very light moment, he said he wasn't expecting it. He hadn't even packed a shoe. But on a serious note, said that they're going to do everything to ensure that there's a peaceful transition and this government succeeds. We've also seen the former president, Arqaam, say that this resounding defeat was because of policies that are not people-centered. So the opposition party, which is now the ruling party, centered on that, capitalized on bread and butter issues to address the current challenges and needs of the people. So the ball is now in their court to see if they live up to the expectations.
Yeah, I mean, the challenge is big ahead. And I said diamonds are not forever, namely because Botswana relies so much on the sale of diamonds. But it hasn't been a good couple of years because of weakness of demand coming out of China, oversupply issues, etc., lab-grown, the emergence of lab-grown diamonds as well. To what extent is that going to cast a shadow over the issues that the new governments are going to have to deal with? Because the economy is very reliant on diamonds. How can they sort of break the stronghold?
Jumana, that is the million-dollar question. In fact, in his outgoing speech, we heard former President Mokgweetsi Masisi say that the economy is going to be a challenge to the new administration. They are projected to grow by only 2%. And if you look at key indicators like unemployment, 28% amongst the youth, there's corruption, there's rising insecurity. And we saw the President, Duma Boko, say that they're going to work on diversifying the economy. Of course, diamonds are a great source of income, but they've not been living up to expectations. And you also have things like tourism, but it's time to inject some more vibrancy into that economy. And if we just stay with diamond, the former administration signed a $751 million deal with De Beers that they were not happy about, and they even threatened to walk away. We are likely to see President Duma Boko try to rebuild those relationships, patch things up, because it says we have to protect the goose that lays golden eggs while they pursue alternative ways of diversifying the economy.
Bloomberg's Andira Ganga, thank you so much for bringing us the report on the pretty surprising election result in Botswana. All right, a quick look at equity futures. We are shaping up for quite a busy week with the U.S. elections, the Fed, so much going on. Futures are leaning towards the green. S&P futures up 0.2%. NASDAQ also leaning towards the green after that pullback that we spoke about. Magnificent 7 stocks down 2% throughout the course of last week. And Euro Stoxx futures leaning flat, slightly towards the green as well. Coming up, oil prices rising after OPEC Plus delays a production increase by 1 month. So they've postponed it yet again and will be signaling that they're putting extra barrels back to the market as of January, no longer as of December. We're going to discuss that and more in just a few moments. We will be live at ADIPEC in Abu Dhabi. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a crushing response to his country's enemies, including the United States. Oil advances after OPEC Plus agrees to push back its December production increase by 1 month. We are live at Abu Dhabi's ADIPEC with the latest energy updates. Global luxury brands hitting headwinds in China with the opening of LVMH's flagship store in Beijing further delayed until as late as next year. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Big week coming up as we've been highlighting U.S. elections, the Fed, Bank of England, the Standing Committee of the NPC. All of that is going on this week. To give you an idea of how markets are faring, we are starting the week off in positive territory, both the S&P and NASDAQ, leaning towards the green. This is after a marginally better close on Friday, after some gyrations came through in Magnificent 7, the likes of Alphabet, Meta, even Apple pulling back towards the end of the week. Magnificent 7 down 2%. So a bit of a bumpy ride for tech stocks. But this week, the focus is very much on elections. And the reason I bring this up is take a look at what's happening to the USD today. We are down 0.6%. The USD and US yields have been closely tracking the polls. And what's interesting about this is over the course of the weekend, new polls came out suggesting that Harris has a marginal lead in some of the swing states, including the likes of Iowa, which Trump won by a decent margin back in 2020. And on the back of that, what we are seeing is those Trump trades, the higher US yields, the stronger USD are pulling back. So that is the reason that the USD is coming under some selling pressure today. So in the red this morning. And then Brent also in focus. Take a look. We're almost back at $75 again, about 1.6% higher. Once again, the market is accounting for further geopolitical risk, with Iran warning of a potential reprisal now to the Israel attacks that took place a week ago. Plus, news out of OPEC Plus that they have decided to push back the timing of putting further oil barrels back to the market by yet another month. So we'll begin putting extra barrels back in the beginning of 2025. So the market took that quite well this morning. And this is just a quick look at the terminal chart and what is priced in as far as the Fed. This week on Thursday, 25 basis points, one cut is priced in, another cut pretty much fully priced in as well by the end of the year. So we're sitting about 46 basis points of rate cuts priced in by the end of 2024. But let's continue the conversation and check in on how markets in Asia are faring this morning. Avril is in our Singapore studio. Just give us an overview.
Yeah, Jumana, we're seeing Asia stocks mostly gaining ground, and in currencies amid the unwinding of the so-called Trump trade, the yen is benefiting. It is the outperformer among Asia FX today, also getting a bit of a tailwind from the BOJ governor last week's slight shift in tone, a bit more hawkish than some in the markets had been expecting. But as you can see there, offshore, onshore yuan are both gaining ground against the greenback. Flip the board, because I also wanted to give you some color behind this as we are bracing for this week. We're seeing how the 1 week options implied volatility has been surging to a record and actually exceeding what we're seeing since the 2015. You can see here, this is when China markets boomed and then crashed, and the 2020 presidential election as well. So it gives you a sense of how extreme the positioning and what markets are bracing for is at the moment. Jumana.
Excellent. Thank you so much for the overview, Avril Hong in Singapore. Now, some big news in energy this morning. OPEC Plus has agreed to push back its December production increase by 1 month. This marks the second delay to its plans to revive supply as prices continue to struggle amid a fragile economic outlook. For more, let's bring in Anthony De Paula, Bloomberg's energy reporter, who joins us from ADIPEC in Abu Dhabi, and I'll be heading down there shortly myself to join you, Anthony. But OPEC are giving us some news this morning. They've decided to push back the timing of putting those extra barrels back to the market. What is the justification?
Yeah, good morning, Jumana. Well, we'll look forward to seeing you down here. It's getting quite busy at ADIPEC. And we're going to hope to hear more about that decision from some of the OPEC ministers who are going to be here at the opening ceremony about 2 hours from now. The justification is simply that the market was too weak. When OPEC Plus went into this agreement in June, which, if you remember, it took a lot of explaining from the OPEC Plus members, particularly the leader, the Saudi energy minister, Prince Abdulaziz bin Salman, to explain what the plan was. It was a series of phased-out cuts. They were going to be taking off those voluntary reductions first, but they left it open that if the market was too weak, they could delay it. So we've already delayed it now. This is the second time it's been delayed, so the third month. We were going to start earlier already. We were going to have some cuts on the table, but that's been delayed because of that market weakness. And a lot of the traders that we spoke to at Bloomberg were divided as to whether they thought the group would delay it or would go ahead with it. There's a lot of pressure within the group, countries that have been investing in oil production, that they want to get those barrels on the market rather than keep them idle. But simply the weakness in the market, particularly over the last week, just didn't seem to support the ability to increase. It's that kind of that weakness from China, uncertainty over politics. That is keeping things under pressure here in terms of the oil market. So that's why we're seeing this cut delayed again another month.
Yeah. Well, ADIPEC is always an opportunity to discuss not just the short-term drivers, which is some of the drivers that you're listing, but also some of the more medium-term, longer-term drivers. And I know in previous years, there's been lots of discussions about this so-called energy trilemma, right? And that they want to find a way to maximize all of these three constraints. There's a focus on sustainability, but also equity and affordability. What do you think the main theme is going to be this year for ADIPEC when you think about some of those medium-term drivers?
Yeah, well, maybe I throw a curveball in terms of that question. I mean, the theme that it seems like what they want to talk about here is AI, AI in the industry. So the ADNOC CEO, Dr. Sultan Al-Jaber, brought people together to talk about the energy industry and the influence of AI and using AI in there. Now, the energy industry has always been a technological industry, lots of drilling technology, horizontal drilling, different types of geological surveys. So there's always been an technology heavy in the energy industry. So we would expect some of those technologies to go in there. But really, as you said, that kind of trilemma about making energy affordable, about making the supply sufficient enough. But we've really got, in this region, the Gulf producers are interested in getting their oil out of the ground and getting as much of that on the market as possible. They want to do it in a sustainable way. I mean, the oil is easier to bring out of the ground here, so they can do that with less emissions than in some other more difficult regions of the world. So there is that going for them. But they have vast resources here that they want to use. They want to bring those on the market. They're looking at things like turning oil into chemicals and producing more of those things like plastics that we use in lightweight cars, mobile phones, computers. So they see that oil demand going on still for decades to come. Perhaps less so in transport fuels in the future and more so in going into chemicals. But, here we will be talking about sustainability. We'll be talking about affordability. We'll be talking about AI. But the bottom line is they want to produce and sell their oil, Jumana.
Yeah, and also they want the investments to help continue with those efforts. It's something that the president, Sultan Al-Jaber, has spoken about in the past. Anthony DePaula, Bloomberg's Middle East energy reporter, thank you so much. Now, back to U.S. politics now. U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcomes. Millions of ballots have already been cast in person or by mail. Now, the economic consequences of the vote will be far-reaching and affect taxation, trade, immigration, and energy. Now, for more, we're joined by Ramey, the Associate Professor of Political Science at the York University in Abu Dhabi. Great to have you with us on the show. So it feels like it's a bit of a coin toss at this point. The polls are neck and neck, depending on which day that you're looking at them. It seems as though over the course of the weekend, they've moved slightly in favor of Vice President Kamala Harris. What should we be watching out for on the day itself to determine which direction the vote is going?
So great to join you here this morning and to talk about this wild election. Yeah, so my tea leaves that I look for is not necessarily in places that are expected to be swing states, but it's places that are not expected to be swing states. For example, Virginia is a state that has been won by every Democratic presidential candidate going back to Barack Obama in 2008. But before that, it used to be a fairly safely Republican place. Back in 2016, when Donald Trump surprised the world and beat Hillary Clinton, the polls closed in Virginia at around 7 o'clock Eastern time in the United States. And 2 to 3 hours after that, Virginia was still too close to call. And I still think that's a pretty good benchmark. If states like Virginia that favor the Democrats are still too close to call within a couple of hours after the polls close, I think that's a signal that Trump might be on to surprise us yet again with a return to the White House. If, on the other hand, states are just being called left and right pretty quickly, I think that Harris has got it.
Yeah. What about turnout? I mean, people talk about turnout a lot, and I know there's still a good chunk of the population that are undecided. It's not huge, but it is enough to move the needle. How closely should we be watching out for actual turnout numbers?
This is an environment where turnout is king. I don't think that The people have made up their mind more or less whether or not they support Vice President Harris or former President Trump. The question is, are they going to actually show up to vote or not? And particularly in the 7 key swing states, turnout is going to make or break the election. And I think that particularly places like Michigan, which was a state that Trump surprisingly won in 2016, but then Biden won in 2020 with a very large Arab American population in the Metro Detroit area that's been upset with the Biden administration's handling of the war between Israel and Palestine, and now with Lebanon dragged into it as well. And that community has shown some, either proclivity to stay home, or in some cases, some local political leaders in Dearborn, for example, have actually thrown their support behind former President Trump. And so the question is, will critical communities like that turn out in large numbers? Democrats really need a high voter turnout in urban and high educated areas throughout those swing states in the Metro Detroit area, Milwaukee, Philadelphia, Pittsburgh. If their turnout numbers can't meet or exceed what they were doing in 2020, it's entirely possible that rural and exurban votes that Donald Trump was able to get 70, 80, and sometimes even 90% of in certain counties will ultimately carry him back to the White House.
Yeah, I read an interesting article in Axios over the weekend, and I'm just going to bring you a line from that report saying the Senate map favors Republicans, but the Senate money favors Democrats. And here they're alluding to the fact that for senators in the Democratic Party, it's been a much more successful fundraising campaign than it has been for Republicans. How is that likely to influence the election outcome?
This is such an interesting change, right? So if we look back to just 2012, we don't have to go that far in the past. The Republicans were always the ones that were outraising Democrats and outspending Democrats. And in the Trump transformed Republican Party, the tables have pretty much turned. And even Rick Scott, who's running for re-election for the Senate in Florida and will likely win fairly comfortably, he is being outspent by massive amounts, by tens of millions of dollars by Debbie McCarcel-Powell. And will this money matter? Possibly. I think ultimately it's political headwinds that are going to drive who wins and who loses. I think if Trump is able to turn out his base based on his own magnetic personality in places with key Senate races like in Pennsylvania and Ohio and Michigan, then the Republican Senate candidates in those states, even though they might be being outspent by 2 or 3 to 1 by their Democratic counterparts, they might be able to catch some headwinds from Trump. Though in the polls in those states, it seems that the Republican Senate candidates are running behind Trump at this point. Nevertheless, the Republicans are looking pretty comfortable in a pretty comfortable position to hold all of their current seats and pick up at least Montana and West Virginia's Senate seats, which would give them the majority regardless of who wins the presidency.
Yeah. Adam, just a last final quick one for me. To what extent are these celebrity endorsements, the likes of Beyonce and J-Lo getting on stage with Kamala Harris, going to work to her advantage?
I think that celebrity endorsements probably don't matter too much in gross margins. But I think in an election environment this tight, literally anything to get people to show up to vote can matter. And I think particularly getting out young people, and especially young people of color and just non-white populations in major urban areas throughout the U.S., that's the Democrats' key to victory. And so getting whatever sort of celebrities that are capable of getting people off the couch and interested in politics to endorse your campaign, to hold rallies with you, I think is incredibly helpful. And traditionally, Republicans were not doing this sort of thing before Trump, but Trump himself has embraced sort of a quasi-pop star status among the likes of Hulk Hogan and Kid Rock and others.
Yeah, well, it keeps you in the public's conscious, which is half the battle, isn't it? Adam Ramey, thank you so much for joining us on the show today. Really good to chat to you. Let's see what happens this week. Associate Professor of Political Science at the York University in Abu Dhabi. Now, Berkshire Hathaway's cash pile reached more than $325 billion in the third quarter. This is a record for the conglomerate as Warren Buffett continues to refrain from major acquisitions while trimming some of his most significant equity stakes. The Omaha-based company says it has once again cut its holdings in Apple, and its stake in the iPhone maker was valued at $69.9 billion at the end of the quarter. That is down from $84.2 billion, indicating that Berkshire cut its stake by about 25%. Now, coming up, Chinese lawmakers are gathering to sign off on a fiscal package worth trillions of yuan to lift growth since the pandemic. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. China's top legislative body will meet in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent Min Lo in Hong Kong. So just give us a preview of what to expect out of the Standing Committee of the NPC. Min.
Yeah, so far today, markets have been quite resilient. I was just checking the CSI 300 and the Shanghai Comp both were up quite a bit just before the lunch break. And of course, a lot is riding on what the legislature will approve in terms of the fiscal package. I think market consensus right now for this year at least is a 2 trillion yuan in additional stimulus. But of course, multi-year, if you look at 3 to 5 years time frame, and markets are expecting between 6 to 10 trillion yuan in additional stimulus, additional bond issuance to tackle local government debt, as well as to buy back unsold homes and property on the market. But I think the wild card here that people are looking out for is whether there will be specific measures targeted at boosting consumption, perhaps some form of cash handout or subsidies that would go beyond the current equipment upgrading program. And of course, we had a rather lackluster start to the earnings season that has been weighing on sentiment. You have the U.S. election going on. The tariff risk, according to Goldman Sachs, has already been priced into markets so far, and Goldman Sachs is still seeing a 20% upside to Chinese equities if the government delivers on fresh stimulus. So that's something to watch very closely by the end of this week. That's when we might get news lines from the outcome of that meeting.
Yeah, it's interesting because I believe it's 4 days long. And so something very major is happening in the United States during the course of that 4-day meeting. So we'll see how they respond to that. Bloomberg's China correspondent Min Lo, thank you so much for the overview. We'll circle back with you later this week as well. Well, coming up, LVMH's 5-story flagship store in Beijing remains fenced off months after it was expected to open. We get the latest on China's deepening luxury slump next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, global luxury brands have been hitting headwinds in China as consumer spending slows. One of them is LVMH, whose 5-story flagship store for Louis Vuitton in Beijing is facing delays. It was supposed to open in the first half of the year, but remains fenced off today, with sources telling Bloomberg it may not open until as late as next year. Let's get more with Bloomberg's Shirley Zhao in Hong Kong. Shirley, so just give us a sense for how bad China's luxury market slowdown is right now, and the fact that LVMH are really struggling to open up what would be their flagship store in Beijing.
So over the past decade, the luxury market growth in China has been double digits almost every year. But this year, it's estimated that China's luxury market will actually see a 15% drop in sales. So, and although, big luxury brands don't really break out China for individual financial reporting, groups like LVMH and Kering have seen double-digit drop in sales in China, in the region, including China. So we could see that, there's a big shift from previous years. And we've seen big brands facing sales pressure. For example, brands like Burberry and Givenchy and, some brands under Kering like Balenciaga are all offering discounts of up to 50% on China's e-commerce platforms. And, there, for example, the LVMH store in Beijing that still hasn't opened, even though it's expected to open in the first half of this year. And even Hermes, which is supposed to be one of the most resilient against economic downturns, is facing sales pressure. Sources told us that salespeople at Hermes are actually lowering the amount of money required to buy other non-core products to be able to access their most iconic, like Birkin and Kelly bags.
Yeah, and I've just got a minute here, Shirley, but let me just ask you, is this slowdown cyclical or more of a long-term shift as we talk about the efforts to boost the economy?
Well, many observers are saying this is actually more of a long-term shift. Of course, the most direct trigger is China's economic slowdown right now. A lot of people, a lot of young professionals have been struggling in looking for jobs, or they're losing their jobs. In fact, there is one of the people that we interviewed said that she used to make 3 million Hong Kong dollars a year, and she would spend 1/5 of her income buying luxury products. But now she's lost her job, and she's stopped buying luxury products. Xi Jinping, President Xi Jinping in China, is very focusing on economic equality, and that means showing off your wealth is not something that you would want to do in China. But at the same time, there's also a long-term
Shirley, I'm going to have to leave it there. I'm going to have to leave it there. We're running out of time. Thank you so much. But definitely something we're going to be watching out for. Bloomberg's Shirley Zhao. We're going to take a quick look at futures before we head out to the break. That is Horizons Middle East and Africa.
This is Horizons Middle East and Africa. Our top stories this morning. Iran's supreme leader escalates his rhetoric on Israel, warning of a, quote, crushing response to his country's enemies, including the U.S. A flurry of polls show Vice President Kamala Harris and former President Donald Trump in a close race, with Harris having a slight edge nationally and in some swing states. And the tight race sees the dollar fall as investors walk back bets of a Donald Trump win. Meanwhile, oil rises after OPEC Plus delays an output hike. Good morning. It is just gone at 9 a.m. across the Emirates. I'm Jennifer Zapasaja in Johannesburg, where it is just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. As Jumana was just telling you, it is a busy week for markets, and I don't need to tell you that. But listen, there's a number of things that we're paying attention to. Of course, there is the U.S. election. There's a number of central bank decisions that we're paying attention to. Also, markets are focused on the China NNPC meeting. So let's just see where U.S. equity futures in particular are positioned ahead of the trading day. As you can see, tilting slightly to the green, but that is coming after we saw last week. We saw a gain in equities after we got those beats from some of the Mag 7, including Amazon. We also did see Intel doing quite well, helping offset some of the disappointing reports we got earlier in the week. Despite the upside, though, that we did see, there was quite a bit of lackluster performances for the indices, and the jobs report that we got on Friday perhaps tainting market sentiment. Also paying attention to the U.S. dollar and what it's doing here. Tilting to the downside now, down about 0.6%, also declining against major peers. We mentioned this at the top of the show. The move is coming as markets are now potentially pulling back on that so-called Trump trade, clearly having an effect on what we're seeing with the dollar right now. And we're also looking closely at oil. As you can see right now, oil up just about 1.5% 1%, just over that right there. Brent crude at 74.24 as it was there. And that was coming after we saw those moves from OPEC. OPEC Plus, excuse me. I do want to bring you this terminal chart, though, because this is one of the many factors that we're paying close attention to this week. And in particular, I mentioned the U.S. election, the central bank decisions. The Fed is one of those that we're paying close attention to, the decision that's coming on Thursday. And of course, we've seen markets swinging back and forth over the past few months on whether or not we're going to actually see a cut later this week. And markets have pulled back on odds of a December cut, as this chart shows. Still, we're seeing a cut likely, but a number of data prints potentially impacting what the markets are thinking the Fed is going to do next. No less, we have to wait, though, for the U.S. election. Listen, let's pivot, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, amid the unwinding of the so-called Trump trade, Asia stocks and currencies are mostly gaining ground today. The yen is outperforming, but keep in mind these currency moves you're seeing might also be exacerbated because Japan is on a trading holiday. And as you mentioned a short while ago, this week is not about just the U.S. election or the Fed, also the China NPC. Just flip the board. I just wanted to show you real quickly as well. When you look at China margin debt, that has actually risen to levels we haven't seen in 2 years. And that speaks to, I think, the market's anticipation of potential stimulus. And that's prompting these traders to boost risky wagers. So on top of the moves we're seeing today, keep that in mind as well. Jen.
Avril Hong in Singapore. Avril, thanks so much. We will check back in with you. Let's turn to the Middle East, though. Iran's supreme leader escalates his rhetoric, warning of a crushing response to the country's enemies, including the U.S., following Israel's missile strike on the country a week ago. For more on this, let's bring in Paul Wallace, who leads our Middle East, North Africa economy and government coverage. He's joining us now. So, Paul, how concerning are these latest comments, considering where the conflict is right now?
Jennifer, I think it is significant because in the immediate aftermath of Israel's strikes on Iranian military targets the weekend before last, Iran's reaction was pretty muted, and Supreme Leader Ayatollah Ali Khamenei didn't sort of vow a retaliation. He didn't say there wouldn't be one, but he was saying that Israel's attack shouldn't be exaggerated. 5 people were killed in those strikes, four soldiers and one civilian. And something has happened over the last week to sort of harden Iran's stance. And now, in the last few days, it is very much upping the sort of bellicose rhetoric and saying that there will be a retaliation for what Israel did. So it's certainly important to note that this change in what Iran's saying its response will be. At the moment, it's still very unclear whether we're talking about another direct strike on Israel from Iran with the use of ballistic missiles or something else. Maybe it would be, there's been a lot of talk about Iran's proxy militias in Iraq firing a barrage of some sort on Israel. So there are many forms an attack on Israel could take. Not all of them would be as escalatory or as significant as what Iran did at the beginning of October when it fired about 200 ballistic missiles against Israel. So we just have to wait and see.
And Paul, I mean, we're also hearing about potential leaked documents that are suggesting that Israeli Prime Minister Benjamin Netanyahu actually manipulated public discourse about the war in Gaza. I mean, considering what you're saying about the bellicose rhetoric that we're hearing, I mean, this doesn't necessarily portend anything good for a resolution to the conflict.
Certainly, and I think this is potentially a big problem for Prime Minister Benjamin Netanyahu if he is personally linked to these alleged leaks, and if it's proven, or if prosecutors in Israel sort of say definitively that these were leaks that damaged Israeli national security. There's long been a sense among Netanyahu's critics within Israel that he tries to manipulate the media by leaking certain things and exaggerating the importance of certain pieces of intelligence gathered by Israel and all that. And a lot of this latest issue stems from the whether or not Israel would accept a ceasefire in Gaza, and whether or not it would relinquish control of the so-called Philadelphia corridor, which is essentially the Gaza-Egypt border. That's an issue that kind of quite quickly reared its head around May, June time, with Netanyahu insisting that this corridor was of vital importance to Israel, and troops could not be pulled out of that, which is what Hamas and Egypt and some others were demanding. So if it's, if this sticks and it's alleged that people close to Netanyahu leaked documents and exaggerated the importance of what they said about the corridor, then that's potentially a problem for Netanyahu.
Right. Paul Wallace, Armenia economy and government coverage leader. Paul, thanks so much for that update there. Let's pivot to the U.S. election. U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day. A flurry of new surveys has them neck and neck nationally and across the battleground states that will decide the outcome. Let's bring in News Desk editor Jill Deeses. So, Jill, dig into these polls now, because we've been seeing the polls swinging back and forth. I mean, how close is this race now, just a day out?
Hey, Jen. Yeah, this is really looking like a coin flip at this point. There were some pretty positive polls for Kamala Harris, at least over the weekend. We did see her leading in a new national poll. Of course, though, as we know, Jen, this isn't really about the national polls. Hillary Clinton won the popular vote in 2016, but famously lost the election because of the Electoral College. To Kamala Harris's credit, though, there was some other polling showing her up in some key battleground states, but really not enough to take over a margin of error that is leaving these two candidates, her and Donald Trump, in an incredibly close contest. This really does not, there's a lot of talk around the uncertainty over this election right now. This really does not seem like we're moving beyond that stage at that point. That all being said, Jen, I will say one thing that that some traders might be weighing into, since, we are seeing a little bit of hedging on, what has been in markets, at least, a really anticipated Trump victory, is that Kamala Harris very unusually was leading in a very well-regarded poll out of Iowa, showing her up actually in that state. Now, that's, of course, a state that Trump won incredibly decisively in the last two presidential elections. What that actually means for maybe some vote shares that she's getting among maybe white Midwestern voters, that's something to be seen here. But really, the big takeaway at the end of the day here, it really kind of seems like it all comes down to maybe Pennsylvania. And this is really still incredibly 50-50. It's just so close.
And Jill, we were just looking at the split screen of the two candidates. I mean, their final arguments could not be any different. I mean, can you just talk us through what they did over the weekend and potentially who they were trying to reach out to?
Sure. So one thing that both of these campaigns do seem to recognize is, again, that it really is coming down to these key battleground states. So we saw Kamala Harris lead several rallies in Michigan on Sunday. She was appealing to black voters. She's certainly lost a bit of headway there. Some black voters are moving over to Donald Trump. So we saw her in Detroit campaigning with them. She really seems to be honing her economic message most of all. She did hold a rally on Sunday, notably, where she didn't talk about Trump whatsoever, at least didn't name Trump whatsoever. So it does seem like she's trying to trend a little bit more toward that idea of positivity. Trump seems to also, really understand the importance of these swing state votes. He's campaigned in Georgia, in North Carolina, in Pennsylvania, of course. But his message, obviously, is a bit more different. I mean, Donald Trump, of course, loves talking off the cuff. He did actually, during at least one rally, seem to really hone on the idea of, maybe of challenging the results after the election. It seems that Donald Trump, no matter what ultimately happens, is prepared to, fight the election results should they be contested. And of course, as we've been talking about, they're incredibly close. So we'll have to see if something like that ends up happening.
And Jill, I mean, many people are describing this as a campaign unlike any other, volatile for the markets, volatile for the public, for the global community. I mean, I wonder when you think about where we're at right now, what do you think potentially has been the most impactful event that really sort of shifted the direction of where this election was headed?
I mean, absolutely no question. It has to be that late June debate between Joe Biden, the sitting president of the United States, and Donald Trump. That's, of course, the debate during which Joe Biden performed disastrously, ended up having to, relinquish the nomination to Kamala Harris, and has really just thrust us into this incredibly historic era that we're experiencing now. She had, the shortest presidential campaign really in modern history here, trying to completely change things and really position herself in front of voters. I mean, were it not for that debate performance from Joe Biden, we would not be in the position that we're today. And it could actually very well be, because he was trailing Donald Trump at the time, that, maybe Donald Trump would have a more decisive way of locking this up now. Really difficult to tell, at least on that front. But yes, I mean, really that debate performance, I think, is really what's characterized here and really kicked off an incredibly volatile, incredibly wild last couple of months of this campaign.
In the home stretch here, Jill, appreciate you being through it with us all. News Desk Editor Jill Deeses for us there. Great to have you on. Still ahead, hear why Arqaam Capital says they are getting more conservative in their investment stance and reducing credit risk. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The dollar fell as investors walked back bets on Donald Trump winning the U.S. presidential election after the latest raft of polling data indicated no clear advantage for him. Treasury yields rose significantly over the course of October as economic data cast doubt on the path for further rate cuts by the Fed. Joining us now is Fady Gendy, Senior Fixed Income Portfolio Manager at Arqaam Capital. Fady, great to get you on. So let's just start with what we're seeing with markets right now. October was volatile for treasuries, for the dollar, for currencies globally, and equities. I mean, what do you make of now a bit of unwinding that we're seeing in this Trump trade playing out in the dollar moves?
Yes, thank you, Jennifer, for having me on. October was a month characterized by very high levels of volatility. We saw that in the MOVE index. There was a spike in Treasury volatility. There's a lot of uncertainty about the U.S. election outcome, about the tail risk of a potential Republican sweep, about what kind of policies might be enacted if there is a Trump win with regards to tariffs and to tax cuts and the inflationary impact on that. And we've seen that reflected in a bear steepening of the U.S. yield curve. We've seen that in terms of taking back some of the Fed rate cuts that were aggressively priced into the front end as well. And it makes sense in this highly volatile environment, at least from our perspective, having come into this with a slight underweight duration stance, to book profits and turn neutral from here and let the noise pass before taking a higher conviction view on the rates market.
But you were conservative, as you note in your notes, but you were conservative in your investment approach in October for reasons that ended up being beneficial, but not for the reasons that you expected. Can you just walk us through that?
Sure. So we entered October having reduced aggressively in our MENA strategies some of our key overweights in the high yield space within the GCC and MENA. So names like Egypt, some of the more dicey GCC high yield real estate names, as we felt that high yield spreads have significantly compressed on an absolute basis, and the pickup that you get from moving from investment grade to high yield is not as compelling as it used to be before. And when you put that within the context of what we're talking about now, which is this heightened rates volatility, headline risk, as well as an increase of geopolitical risk in the region and a regionalization of the conflict now, it made sense for us to cut some of these overweight high yield positions and reduce credit risk in the portfolios until a lot of this dust settles. And I think going forward, it makes sense within the context of the environment that we're in, basically to adopt this stance for the time being.
Is there an outcome, though, Fady, with the U.S. election that could potentially change that stance that you have? We mentioned there's a number of central bank decisions, of course, the Federal Reserve on Thursday. I mean, could you potentially have to reassess that strategy there?
Yes, so what we're watching out for now, of course, is the election and the outcome from that. We think a big part of the Trump trade has already been priced in. We might even have a buy the rumor, sell the fact reaction, even in the event of a Trump win. And you do see a disconnect between what the betting odds are showing and polls, which are neck and neck. So if we do have a Harris win, definitely we expect to see yields to come down. Even if we do see a Trump win, we think that considering how far we've come and the aggressive move in rates that we've seen in October, it makes sense to adopt a buy on dips approach with the rates market and to look to enter into an outright long duration stance. Let's say when the 10-year approaches 4.5 or the 30-year approaches 5%. This is in terms of duration. In terms of the credit risk, we would still want to be conservative, especially in light of the recent comments from Iran that this is not the end of the tit for tat between Israel and Iran, and there might be another retaliatory strike there.
Right. And Fady, just quickly, I mean, is there anywhere else where you're looking outside of the U.S. or are all eyes focused on what happens with the U.S. election before you potentially change your investment approach in other parts of the market, in other parts of the world?
So yeah, so the focus now is on the U.S., of course. We're also tracking what's happening in oil prices. It's good news what has come through from the oil market that the OPEC plus output increase has been pushed out, so that's positive. We're still in a sweet spot with oil, and the key level that we watch there is $60 a barrel. I think if we breach that for Brent, this is where you would see cracks in the MENA space and a clear differentiation between the better credits that have lower break-evens and the weaker credits.
Fady Gendy, great to get your analysis today. Senior Fixed Income Portfolio Manager at Arqaam Capital, joining us there in our Dubai studio. Thanks so much, Fady. Now, coming up, Chinese lawmakers are gathering to sign off on a fiscal package worth trillions of yuan to lift growth since the pandemic. Details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. China's top legislative body is meeting in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent, Min Lo, who's in Hong Kong for us. So, Min, there's a lot at stake here. Is the expectation that China will disappoint or potentially see some upside?
Yeah, well, there has been differing market expectations here, and the expectations have been really high, since months back when the PBOC first unveiled those monetary stimulus. We have been waiting for this day for the NPC Standing Committee to approve a new fiscal stimulus package, and the consensus now is that the government could unveil a 2 trillion yuan stimulus this year, but as for a multi-year package, it could be as high as between 6 to 10 trillion yuan for a 3 to 5 year package that would tackle local government debt and the unsold idle properties and land. But I think the big wild question here is whether there will be any measures to target consumption, especially something that goes beyond that equipment upgrading program that we have been seeing so far, whether there will be cash transfers or subsidies for the lower and middle income group, for example. And we have seen markets been quite resilient so far today, and it looks like, according to analysts we have been speaking to, any sort of Trump tariffs risk has already been priced into the markets. And so we have to see what happens on Friday. It's a week-long meeting. The fact that the government has pushed this meeting back to after the U.S. election suggests that they will be watching the outcome closely, and that could factor in to the announcement in terms of the size of the stimulus that they will eventually unveil.
Min, let's just stick on that. I mean, what could a potential Trump or Harris presidency then mean for China's economy?
Yeah, well, Harris' presidency will likely mean policy continuity from the Biden administration. And our Bloomberg economics team has crunched the numbers just based on some economic modeling. If we continue to see this tech restrictions and a sort of limited decoupling, that could weigh on China's growth by about 0.4 percentage points next year. But if it's a more serious decoupling, it could weigh on growth by as much as 1%. If we look at Trump, a Trump win scenario, that could lead to a very high likelihood of tariffs. If it is a 60% tariff across the board for Chinese goods, it could, by some analyst estimates, again, also weigh on growth by about 0.4 percentage points. But if there is a global retaliation to those tariffs, that impact could be mitigated. And of course, it could prompt China to double down on strengthening its supply chain resilience, diverting its trade to other more neutral countries, and also doubling down on its self-sufficiency push.
Great to get your reporting. Bloomberg's China correspondent Min Min Lo for us there. Thanks, Min Min. Now coming up, oil prices rise after OPEC Plus delays an output hike and Iran ramps up its rhetoric. More on this next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. The dollar weakens as markets brace for election volatility. The latest U.S. polls showing no clear advantage for Kamala Harris or Donald Trump. Oil rises after OPEC Plus agrees to push back its December production hike by 1 month. Plus, change of power in Botswana. The opposition wins the parliamentary elections for the first time in almost 60 years. It is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. It is going to be a busy week. After last week was quite a busy week for earnings and data. This week, of course, we have the U.S. election, a number of central bank decisions, and also we were just talking to our reporter about that China NPC meeting. So let's just take a look at where markets are positioned ahead of the trading day later. If we start with U.S. equities, tilting towards a higher open for both S&P futures and NASDAQ 100 futures. The equities got a little bit of a boost later in the week after we did see some beats later from Amazon and Intel, that helping potentially to offset some of the more disappointing results that we got from the Mag 7 earlier in the week. But both of the indices closed the week with a bit of lackluster performances given what we've seen over the past few months. And the jobs report that we got on Friday also potentially tainting market sentiment. The U.S. dollar also is in focus, down nearly 0.6% here, also declining against major peers. The move is coming really, as we mentioned, as the markets are potentially unwinding that Trump trade and digesting some of the polls that we got over the weekend showing VP Harris with a slight edge over Trump. And finally, Brent crude slightly up here. Well, not slightly up. I mean, it's up 1.6% for Brent crude at 74.29, coming after OPEC Plus agreed to push back that December production increase by 1 month. I want to bring you this terminal chart, though, because as we are digesting a number of the events that are happening this week, the Fed, of course, is also in focus. Markets have sort of swung back and forth over the past few months about what the Fed is going to do. But as this chart shows, potentially markets saying the odds of a December Fed cut are slightly pulling back, potentially that coming after some of the data that we got last week, including the jobs report, and of course, waiting to see the outcome of that U.S. election, though a cut is still likely. Let's turn, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing that unwinding of the so-called Trump trade. Asia stocks, currencies mostly higher. The yen is outperforming. Caveat here, though, that the currency moves might be exaggerated because Japan is on a trading holiday. But I wanted to highlight to you what we're seeing on the Hang Seng. This chart, courtesy of MLive's Mark Cranfield, shows you how recently we've been seeing Hang Seng volatility really climbing. And then you look back to 2022, the two periods where we saw this actually foreshadowed extended declines in in Chinese stocks. So it gives you a sense of what's at stake out of China's NPC this week. And as some has also been highlighting, even if we do see a magic number of sorts in terms of trillions of yuan being announced for fiscal stimulus, it might still take a while before details on that is going to be announced. So it could make it quite tricky for China's stock to sustain gains. Maybe this time will be different though, Jen.
Avril Hong in Singapore. Avril, thanks so much for joining us and giving us that update. Let's stick on oil. Oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated again in the Middle East. For more, let's bring in Bloomberg Saudi Bureau Chief Christine Burke from Riyadh. So, Christine, just talk us through the reaction and what exactly drove this decision by the group.
Well, good morning, Jen. As you've been talking about over the course of the show, we are seeing that pop higher in Brent prices with the global benchmark creeping back up toward that key $75 a barrel mark. And going into this OPEC Plus decision, oil traders were quite divided on whether or not OPEC Plus would actually be able to proceed with its planned supply output increase of 210,000 barrels a day in the month of December. So this decision to push that back by 1 month probably caught some traders off guard. RBC actually issued a note overnight saying, quote, OPEC Plus has once again provided its penchant for plot twists. But really this so-called plot twist, if that's what you want to call it, shouldn't come as that much of a surprise considering all of the uncertainty that we are seeing in global markets. I mean, we have the U.S. election this week. We have a key rate decision from Federal Reserve Chair Jerome Powell on Thursday. And of course, we have that potential escalation and conflict happening in the Middle East. On top of that, we are seeing weaker supply-demand fundamentals in the oil market itself. So we're seeing weaker demand in China, weaker demand in Europe. And also, we got big oil earnings from Exxon and Chevron on Friday that showed that those two companies are heavily increasing production in the United States. So taking all of that together, and this probably just is not a market that OPEC Plus wants to test in the form of bringing more supply back to the market.
And Christine, I mean, you mentioned some of the big events that we're watching for just globally. When we zero in, though, on the oil industry in particular, is there any other data points or focus areas for the week that we should be paying close attention to?
Yeah, definitely. There are two key things I want to highlight. The first is that we get official selling prices from Saudi Arabia, which tends to be a key indication of where the kingdom sees demand for its crude. A Bloomberg survey of traders indicates that Saudi Arabia will cut prices, which just underscores, again, the weakening demand picture that we are seeing across most of the energy space. On top of that, and perhaps the bigger thing, is that we get Aramco earnings tomorrow, with the key focus being on how much the company's balance sheet is deteriorating as it maintains that massive quarterly dividend payout of $31 billion. Bloomberg Intelligence notes that payouts continue to exceed cash flow, and it has actually said that we could see Aramco's net cash position turn negative during the third quarter. And really what that suggests, or what that means, is that we really need to ask the tough question of how long Aramco will be able to sustain the world's biggest dividend.
Yeah, that is the earnings report that we are focused on. Any surprises expected there, Christine?
I mean, I think a surprise would be if Aramco takes the decision not to actually go ahead with its $31 billion quarterly dividend payout. We are expected that it will maintain that for the current quarter. If there was a change there, that would come as quite a surprise. I think more so what the market will be looking for is, again, how that balance sheet looks and what that indicates about payouts for 2025 and beyond.
All right, Bloomberg's Riyadh Bureau Chief Christine Burke. Christine, thanks so much for joining us today. Thanks so much. Now, relations between the U.S. and China have faced multiple challenges in recent years, and both Republicans and Democrats are signaling a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the U.S. election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate. because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Stephen Engel there for us. Now, coming up, a seismic shift in Botswana. We discuss the significance of the opposition coalition winning the election next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's turn to Botswana, where an opposition coalition has emerged as the surprise winner of the parliamentary elections. Duma Boko was sworn in as president after his coalition, the Umbrella for Democratic Change, secured an outright majority in the 61-seat legislature. It's the first time power has changed hands since independence almost 60 years ago. For more, let's bring in Bloomberg's Ndiro Oganga, joining us from Kigali. Ndiro, so what exactly does this result mean for Botswana? This is a seismic shift.
Absolutely, Jen. It is a new shift in the political sphere of Botswana. 5 years ago, President Masisi represented the change, and now Duma Boko is the face of this change. And for a victory this resounding, there was no pomp, there was no color, there was no glamour, just a very small swearing-in ceremony where the president made quite an impassioned speech. He understands the current state of the country, and he said, "I dare not fail." He promised to do everything within his power to ensure that he lives up to the promises he made to the people. He also put his human rights back background to work, inviting diverse opinions in government, actually encouraging the citizens to be enriched so they keep the politicians apart. We've also seen statesman-like behavior from the former president, Mokgweetsi Masisi, who immediately it was clear that he was losing office, did a press conference, conceded defeat, and actually said the evidence is overwhelming. We have lost massively. And on a lighter note, he said he didn't even park a shoe because he wasn't expecting to lose the election. But on a serious note, saying they're going to do everything to support this government so that it succeeds. And this defeat, if you look at it in entirety, it's very crushing and loud. You had BDP coming a distant fourth with the president's ruling party, UDC, winning a majority of the 61 legislative posts. Former President Arqaam says this is because of lack of people-centered policy, and you had UDC centering their campaign around bread and butter issues, which propelled them to victory.
Yeah, and Indira, we've been seeing a lot of those changes shifting. I mean, look at South Africa in particular a few months ago when a lot of the issues sort of come to light at the polls. When we talk about this new government and the issues that they're going to have to deal with, I mean, what do you see potentially as top of the list?
Jen, top of the list will be how they're going to raise revenue. If you look at diamond sales, which account for the bulk of the country's revenue, they've slumped by about 73% from years high. You have economic growth being projected at a dismal 2%, and this is on the modest side of things. This is also a government that will need to clamp down on expenditure, because if they don't, budget deficit is likely to grow. Debt is also likely to grow. And at a time where windfalls for the government are really small because revenue from diamonds have shrunk, all this is happening in an economy where unemployment is at 28%, corruption is rampant, crime is rising, and that's why you saw the president promising 400,000 jobs in the next 5 years, also promising to cut tariffs on water and electricity to ease the burden of people. How exactly is he going to do this? One, he'll try and patch relations with the beers that are unhappy with how the previous administration treated them, but also diversify that economy, because if they don't, it's likely to get tougher and tougher.
Yeah, it's a fascinating story. Really appreciate you giving us the latest report there. Indira Oganga in Kigali for us, covering the Botswana elections that we got just a few days ago. Now, coming up, Berkshire Hathaway's cash pile reaches a new record. We'll get the latest on the conglomerate's earnings next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Global luxury brands, have been hitting headwinds in China as consumer spending slows. One of them is LVMH, whose 5-story flagship store for Louis Vuitton in Beijing is facing delays. It was supposed to open in the first half of the year, but remains fenced off today, with sources telling Bloomberg it may not open until as late as next year. Let's get more with Bloomberg Shirley Zhao in Hong Kong for us. So Shirley, how bad is China's luxury market slowdown? Give us a sense of where it's at right now.
So this year, China's luxury market sales is expected to drop 15%, which is like unprecedented. So over the past decade or so, China's luxury market growth has been on double digit almost every year, largely. And even though luxury companies like LVMH and Kering don't break out China for individual financial reporting, their sales for the region, Asia Pacific, including China, excluding Japan, has been falling double digit this year so far. And, that we can see that this region is largely driven by China. And within China, luxury brands are facing a lot of sales pressure. For example, sources told us that Hermes, one of the most resilient brands against economic downturns, salespeople there are lowering the requirement for, purchasing an enough amount of money for other non-core products to be able to access some of their most most iconic bags like Birkins and Kelly's. And in the past, customers in China just reached out to salespeople asking them for the availability of different products. But now salespeople are actively reaching out to some of their biggest customers, trying to tell them, okay, we've got these products available. Do you want to buy it? So this is a complete shift from what's been happening over the past few years.
Is there anything more that they could be doing, Shirley? And I mean the brands themselves.
So one obvious thing that a lot of brands are doing right now is cutting costs. For example, they are freezing capital budget, and they are maybe, downsizing their stores or downsizing their workforces, and they are, trying to negotiate rents with their landlords. But at the same time, they're also shifting to focus on more VIP customers, because those are the people who are less affected by China's economic slowdown and whose spending power remains strong. So we could see that luxury brands are organizing more VIP targeted events, for example, exclusive invitations to like the Paris Olympics or, store openings and other kind of exclusive events to to make the customers feel special and to encourage them to spend more.
Wow. It'll be interesting to see how that plays out. Bloomberg, Shirley Zhao in Hong Kong with us there, talking luxury. Now, Shirley was just talking there about strong spending power. Let's just pivot to Berkshire Hathaway's cash pile. It's reached a record $352 billion in the third quarter. The conglomerate also cut $325.2 billion in the third quarter. The conglomerate also cut its stake in Apple again, this time by about 25%. For more, let's bring in Bloomberg's Charlie Wells from London. So, Charlie, Warren Buffett still can't find anywhere to deploy his cash pile. What is going on here?
Yeah, that's a record amount. And look, the world's most famous value investor just isn't finding a lot of value right now at a time where the S&P 500 is up about 20% this year, and Berkshire Hathaway's own stocks are up about 25% this year. And so look, at a time when, when Buffett tends to struggle to find deals, one of the strategies is to buy back stock, but even that stock is too expensive. And look, this sounds like bad news, but Berkshire Hathaway and Warren Buffett in particular is a very patient investor, and he has said previously that he's happy to wait, sit on the sidelines until they can find investments that are low risk, but that can make them a lot of money.
Is there anything to be read, though, Charlie, into Berkshire Hathaway's continued stance on Apple shares?
Right, so significant share sales there in Apple this quarter and the previous quarter. And because this is Buffett, we kind of want to try to read the tea leaves here. And I think there's sort of two interpretations. One, that, Buffett's never really been a huge tech guy. Maybe he sees some issues with Apple. Of course, we've seen something of a slowdown in China. But the other read here is that this is a little bit more perfunctory of a sale. Their exposure there has gotten really big over time. And, Buffett still is a strong backer of Apple. He talked at the annual meeting in May about how great this company is, even better than a number of his other marquee investments. And so this looks like it's more just sort of a trim, and there could be some, tax benefits that they get, or at least heading off some tax hits that they could potentially take in the future.
And Charlie, just about a minute here. I mean, what other parts of the conglomerate are you paying close attention to?
So look, this is a sprawling American conglomerate. I think one of the issues that we really have to pay attention to here is the insurance business, and that is one of the big parts of this business. And they took some significant hits in the third quarter from Hurricane Helene, so that hit into some of their underwriting revenue. Looking across the business, I think, they saw some improvement in the energy space. Also in insurance, on a kind of flip to that narrative, they saw a boost to Geico, one of their larger insurance holdings. So, quite a spread here. But those operating earnings, which Buffett likes to pay attention to in the third quarter, took a hit.
All right. Bloomberg's Charlie Wells in London for us. Charlie, thanks so much for joining us. Let's take a quick look at where markets are right now. Futures position just ahead of the trading day. We mentioned it is a busy week. The U.S. elections are tomorrow. We also have the Fed decision coming later today after a raft of earnings that we got. So U.S. equity futures tilting to the upside there. And we'll wait to see really how the rest of the day plays out and how markets continue to digest a lot of the uncertainty that is playing out right now. All right, that does it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.